Hello and welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, we are going to be taking a look at the S&P 500, the Magnificent Seven stocks, and seeing how stocks are reacting to the most recent 25 basis point rate cut. So starting off with CNN, fear and greed, we are down in fear, so there might be some good opportunities. And on pie vesting, we haven't checked this one in a bit. This one is also down into fear. Going into a couple charts, I think these are some things to possibly consider is that on average, inaugurations tend to be somewhat bearish. We'll see if that holds up this upcoming year. Doesn't have to. And as far as the way the market reacts to rate cuts after an initial rate cut in a non recessionary environment, we've been following this average trend. Of course, when it comes to how the Fed is cutting rates, how is more important. And if they are cutting by 50 basis points, if they're cutting large and fast, then you want to be concerned. But as of right now, they've been averaging 25 basis point rate cuts. So even though they said a pause is likely coming sooner than later and the markets reacted negatively to that, we still tend to see bullish sentiment overall. And even if they do raise rates again, watch out for when they start cutting by 50 points, 50 basis points consecutively. Then that might take a year or so. Then that might be closer to where the actual peak of the market is. As far as crypto, I know a lot of you here subscribe to my channel or here for the crypto content. Right now, it has just gone up or down into high greed. I'm sure this will go a little bit lower sooner than later. Alt season index, we're still making a higher low, so possibly some good deals there. And subscribe if you want to hear more about the Bitcoin rainbow chart. And I talk about the crypto cycles, areas that take profits and areas that are at a good discount. So let's get into it. So the Fed yesterday cut by another 25 basis points. Yes, they cut by 50 the first time, but they didn't meet in October, so it's just been an average of 25 basis points. And the common sentiment out there is that they'll pause somewhere around 4% or even 3.75. So we'll see what happens with that. Just something to keep an eye on. The reason the markets reacted so negatively, though, is because they were talking about the economy doing well. So there not being as much of a need for rate cuts in the future, or at least as many in 2025. So if inflation starts to reaccelerate, if um, if the economy is doing well, then they may pause and very well likely may raise rates again. And I've been comparing this to the late 1990s scenario because back then we had the dot-com bubble. Now we have the AI bubble. In 1998, they did cut, pause, and then raise rates again before rates and then fell off a cliff. So just something to keep an eye on. And if we take a look at inflation and just see what's going on there. Inflation, as of right now, they did have that 2% target. It did tick back up. I think it's interesting to throw the moving averages on here and to see how the 200 week or the 200 day, sorry, was acting as support. And now maybe it'll be resistance. Maybe inflation will hit that 3% area and then we'll see what will happen. Let's get into the other charts. Let's go into the S&P 500. And you can see here that it's just come down to the 50-day moving average. And this has been a moving average it has liked before. Now, the one time it got a little bit lower to the 100-day moving average, almost to the 200. This was in August when you probably heard of the yen carry trade unwind. That is when people were converting dollar to the yen, getting assets cheaper. But when Japan raised their rates, that caused this negative ripple effect. As far as the latest news I've seen from Japan is that they are not planning on raising rates as of now. But if they were to, that might be a precursor for some downside. So even if the S&P 500 came down to the 50, to the 100-day moving average. Overall, we are still in this nice uptrend. And again, here in market psychology, use emotion as an indicator, not a decision maker. Where have been the best discounts? Well, it's been at the 100-day moving average on the way up. So there's possibly some good discounts in the market as of right now. As far as volatility, we had a nice spike up to around 30 volatility. This is the VIX for short, has come back down to this local top area that we have here. So when volatility spikes, you can look for possible good deals in the markets. As far as the percent of stocks that are above the 200-day average, this is always a good one to look at. Look at how low it went. Usually, when we're getting up towards 70, that tends to be a peak. But look where the lows are. It's pretty close to where some ones have been in the past, where there's been some bottoms. So if this starts to turn around soon, this may be a buy the dip scenario. As far as macro, uh, looking at the market with a macro lens, we do want to consider the US 10-year minus 2-year. This is the yield curve uninversion. And when the yield curve starts to uninvert and go pretty fast, usually, at least in the past, these vertical red lines I have on the chart to show this, the bottom of the market is within a couple years. So yield curve on inversion after the dot-com bubble, about a year and a half later, that was the bottom of the market. But look how much higher the yields went when they were uninverting. So not saying a recession's imminent, though in 2019, 2020, that was the case. But it is possible. There may still be some time, and maybe 2020, 2026, I think, is when we might start to really hear about recession concerns start to come in. So I've been hearing increasing talks about soft landing, avoided recession. I think it's too soon to make that call, especially based on this indicator. Unemployment's still the same. We'll take a quick peek at Bitcoin. There's a lot going on here. Let's take a look at the daily. And guys, we're still in this ascending channel. Bitcoin can even come down to 98K. We have this trend line here from the 2021 double top. Even if it came down to 96K, that's fine. We have the 50-day moving average here at around 92. So a lot of people freaking out. I think possible good territory to, again, look for discounts. All right, let's get into stocks. For NVIDIA, you can see what moving average, not trend line, has NVIDIA liked during this bull run for max value. It is liked the 100-day moving average, whereas NVIDIA right now, it's around at the 100-day. Now, I know people have been calling for a head and shoulders pattern, and if that holds true, you can see NVIDIA get down to this 117 area around the 200-day. So if this breaks support at 130, then you can look down here. But overall, on the way up, at least in this bull market, NVIDIA at the 100-day moving average has not been the worst. But do I, for if it does break 117, for even greater discounts. As far as Microsoft, we talked about how it loves the 200-day moving average. Now, we do have a lower high here, and it is coming back down, retesting these 20-day moving averages, might retest the 1618 here at 432. But overall, this is still looking fine. Not too big of a move down. And you can see today, the market's already recovering a little bit. So big spike move down, probably freaked out some people. The markets are doing hot. I'm sure a lot of retail's just starting to get in, so do be careful. But you'd rather buy in during times like this than a week ago when there's extreme greed. As far as Apple, look how extended this one is. This one, it really hasn't even made a move down, but we've talked about Apple, how this one also at the deeper value likes the 100-day moving average, even got down to the 200-day. And on the weekly, if we zoom out, it got down to the 100-week. And we talked about this back here, how this is a very rare occurrence for Apple stock, that only once every other year does it get to this level or lower. And it was bought up. As far as Amazon, Again, think of the news you heard yesterday. Armageddon, the sky was falling. Look at what these stocks have done. They've just come down for a standard correction. So I think a lot of the initial gut reactions were a little bit overblown. And even if Amazon came down, where are some good DCA values? 100-day moving average, okay? 50-day, maybe if you're really aggressive and you love that stock. But if it did come down to the 50-day, that'd be around 209 or 200 for the 100-day. Google had this nice move up to the 1618, peaked above, still in fake out territory. So it is possible Google comes down. If it did come down towards this wedge trend line that we have somewhere around 180 or the low 180s, I think there could see a nice bounce if it came down there. But it is possible. It just reclaims this 1618, now 193, and the 2618 at 260 still remains my target for Google. But for buy opportunities, I think it's in the low 180s on down. Meta and then Tesla, and we'll call it a day. Meta, it as far as this one, the 20-week moving average has been the moving average it is like the most. So you see how this one, this is its typical move, goes up for a few weeks, comes down for a couple weeks. So it's gone up for a few weeks, may come down, retest the 1618 as support. I think Meta is one with big potential. I love how it's been honoring this 20-week moving average, and this one could get up to the 2618 around 860. No, it seems crazy, but as far as market cap, it is one of the lower market cap of the Mag 7 stocks. So could it get to a $2 trillion market cap by the end of this bull run? I think it could. Lastly, let's go to Tesla. Tesla has been aping this last few weeks. I mean, look at all those green candles. We have 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 green weeks straight. That's not typical. So do not be surprised if we have 1 or 2 more green weeks. The 1618 Feb as the target would be 600, around 600. We're at a $1.5 trillion market cap now. And so I'm sure 500 as well. It's a good psychological number. So you can see it almost got up to 500. But then we have this big doji here and this little red daily candle. Now we do see more of a wick underneath it. So there is still buy support. And if you are wondering why is Tesla all the way up here, I think if you take a look at how stocks like Tesla are some of the most heavily traded on the market every day, it's usually in the top 3 to 5 heavily traded. I think that artificially inflates its price and pushes it up. And so there's probably some sort of short squeeze or gamma squeeze going on where it just starts feeding on itself. So Tesla doing pretty well here, but if it did start to have a decent breakdown, we were in this channel before. We have the former all-time highs at around 414 and the channel around 380 where it could get a nice little bounce. So as far as euphoric times, they don't have to make sense, but look around the market for possible deals. I think looking at some of the dividend stocks, I've been seeing deals in some of these Stanley Black and Decker, the Milwaukee Tools underneath their umbrella. Been hearing some things about Pepsi too. I mean, take a look out there. There are discounts. There are discounts out there in the market that some of these well-known companies are hitting moving averages. They don't hit very often. So there are deals out there. Costco, this one, if it ever gets to the 100-month moving average or 50-month, you are buying up the shit out of that one. So there are deals out there. Think of products you like, products you use, and start looking at those stocks, and maybe you'll see some possible good long-term values out there. If you are interested in me doing videos on stocks outside the Mag 7, please comment below. I'd be happy to do those. I've done those in the past. There wasn't so much interest, so I kind of got away from it. But if there is interest that comes back, I'd like to do more of those. Anyways, thank you guys for watching. Have a wonderful Thursday. Take care.